A familiar sight, somebody filling up at the gas tank. Is that a $60 bill? Let's talk about the future of energy prices. Liam Denning from the Wall Street Journal joins us. And Liam, your research has determined that, in fact, even though we've already seen gas prices come off the highs of earlier this year, there could be further declines ahead of us.
Yeah, that's right. I mean, I think with the gasoline prices, a couple of things to think about. Crude oil has obviously come off quite a bit. It actually rose a little today, but it's definitely down from the highs we saw earlier this year. And I think that reflects a few things, you know, the primary one being kind of a repetition of last year's dynamic, which was everyone starts getting worried about Greece, Europe, the global economy slowing down, et cetera, et cetera.
And let's take a look at the exactly where energy prices have come thus far in 2012.
Right, exactly. So you see WTI there, you know, was up around 110 earlier this year, and now it's down to about 85. Now the thing is, there is room for that to fall further, particularly if Europe really unravels later this year. I mean, if we were to get a Greece exit from the euro, you know, some brokers out there who are cutting their oil forecast right now talk about oil going as low as $60 a barrel under that kind of scenario. Now, we're not there yet, obviously. If you're buying gasoline, you've also got a nice bonus coming in the sense that refining capacity is loosening up over the summer, so there's more competition among refiners, and that's squeezing the refining margin, and so that's also helping to lower the price at the pump for drivers.
Now, if I'm investing in energy companies, do I just run for the hills at this point? I mean, is there
you got to pick very carefully, because what's going to happen is exploration production stocks came off about 20% over the past month or so, and that reflects the fact that oil prices have come down. Now, what hasn't happened yet is that people are starting to adjust down their forecast for the entire year. And at the moment, the current forecast for where oil prices will average the year are starting to look a bit too optimistic given where we are year to date. So what happens is when those come down, everyone's expectations on earnings and cash flow get recalibrated, but also the companies start to recalibrate their budgets. They maybe start to drill a little less, which affects their production. They also think about selling assets, which also affects their outputs. And if you can imagine, all those inputs into the valuation of the company really start to throw it around. And when that happens, investors can get scared and start to sell out of the sector. So you could see further legs down.